Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar with Steve Miley on the call for trade day on Tuesday, the 24th of May. So welcome everyone. We're going to go through our usual regular run through in here today. We'll take a look at the calendar. We'll take a look at what we've had, what we've got coming up on the calendar. We'll take a look at some articles from the major news-wise. What are the geopolitical, the fundamental, the macroeconomic events that are impacting markets right here, right now? And then we'll take a look at some charts. What's going on the charts? Where can we see profit potential today? I'm muted, right? Can you hear me, guys? Yeah, I'm pretty sure I'm unmuted. Okay, so let's move ahead. So take a look at the calendar first of all. In the calendar, what we got today, we've had the PMI data, flash PMI data from the Europe, and most of these actually you see in red in the UK, Eurozone as a whole. Germany did beat though expectations, but most of them actually in the red, so lower than expectations. And looking ahead to this afternoon, we do have. I'm not sure. I keep getting a flash up saying that I'm muted. I hope that I'm. I think I'm unmuted. I'm going to carry on anyway. So yeah, we've got in here. We've got the US PMI data. Sorry, I'm just off my thread in here a little bit, guys, because I keep getting a flash up saying that I'm muted. So we've got PMI data from that's the market S&P data coming out this afternoon. That's 9:45 Eastern time this afternoon. And then Fed Chairman Powell, didn't see this previously, but he's due to speak this afternoon. That's 12:20 Eastern time. Late tonight, we do get the RBNZ interest rate decision. So obviously watching out for that as well. Let's take a look then on the major news wise, what we've got going on in here. 5 things you need to start your day. Snap is the big story. Shares slumped 70, close to 30% pre-market trading after the firm cut earnings forecast to below the bottom end of its guidance. Very negative, pulling other social media stocks down. Meta, Pinterest, Twitter, Alphabet, all getting pulled lower. The whole tech sector getting pulled lower by the fact that Snap has put this earnings forecast has been cut. So that's pulled Texas down. Nasdaq languishing lower in here today, about 2% lower at one point. Nasdaq today, a little bit above that now. So we've got a mixed bag. So talking about the PMI data, the Purchasing Managers Index data, and the flash PMI mixed bag, as it's showing here. France and Germany above expectation. Well, as far as I can see, it was only Germany above expectation. UK was below expectations in here. Lagarde in here, Christine Lagarde, President Lagarde of the ECB, said the European Union won't be rushing to withdrawing stimulus more recently, and that's actually helped the euro higher and in here today. And then just talking about the data that we've got coming this afternoon, which we've already spoken about. So stock indices having had a relatively good day yesterday and a strong close in here. Did manage to sell off in here on the overnight. Stock slump, snap cracks, and then as we said already, Lagarde lifting a euro in here. But then there's also these China talk stimulus. That's a positive out there, and also there were some positive soundings as well from regarding the removal of tariffs. Further positive soundings out of the US. Eurozone business growth slowed in May, but still resilient. So that's talking about that PMI data that we've just mentioned in here, and then futures for a snap forecast drags tech lower. Euro gains on the back of both the positive PMI and also Lagarde's comment, but the pound has gone lower after that more negative PMI data for the UK. And then further articles talking about social media stocks set to erase 100 billion on snap warnings. Snapshot is the latest blow to sinking social media stocks. Nasdaq futures, so they were down about 2% at one point today, but a bit above that now. And then the other thing is to know, something we've been talking about in here for a while. Treasuries continue to go higher. 10-year yield hasn't breached 3.2.5% for more than a decade. So we went through 3%. We're back, significantly lower than 3% now, and higher bond prices, lower bond yields in here, reflecting the fact that that the Wall Street thinks the worst is over. Thinks that the most aggressive kind of hawkish or the inflation pressures are pretty much priced in now. So just looking at what we've got. So Europe is not aggressively lower. I mean, it is lower, but we're down about between 0.5% and 1% for most of the major European exchanges this morning on the back of that snap move. And then obviously with a strong day, yes, it was a pretty good day yesterday on the back of gains that we saw from the end of last week in here, but then obviously significantly lower with the Nasdaq leading the way. At the moment, though, so we were down about 2% at one point, down 1.5%. Dow less impacted, down 0.6, about 0.6, and the S&P about 1% lower. Quick nod to the Fed tool. This has pretty much been hovering around 90% for the next two meetings in here. So 83, it's actually dropping to 83. So a slightly raised expectation potentially in here coming through on the Fed to have a more aggressive rate hike, but I'm pretty much nailing on 250 basis point hikes. Right, I'm going to kick off in here on the charts with the Nasdaq. I do hope you can hear all this and that I'm not muted, because I keep getting a flash up saying I'm muted, but the mute button tells me that I'm unmuted. But yeah. So we had this really strong intraday rebound Friday, strong rally in here, but didn't quite manage to get to Friday's highs yesterday. And then obviously a significant setback in here overnight, which is disappointing. But the market is trying to rebound. So we were down 2%, now down about 1.6%. So is this still part of the bottoming process that we've been seeing from Friday? Let's take a look at the 15-minute chart for the day trade opportunity. Well, there's the big Friday rebound, setback. Then we made a new high going into the close and late yesterday, and then obviously we got this significant setback, and then notably lower in here, and then but trying to rebound. I think this is still a buy opportunity. We only just undercut Friday's low. We've rebounded in here this morning. We're pushing back higher. I think we got above this area here on the Nasdaq around 11,900. I think this looks positive. I would want to see it above 11,900 before I decided to buy it on the Nasdaq. And the S&P 500 not as damaged. So in here we do get the setback. It was a really strong day for the S&P. I mean, that Friday, a strong doji pattern on Friday, a turning pattern. Remember this candlestick here, a really impulsive Marabuzo candlestick in here. That's a really positive candlestick for yesterday. And then the market drops back lower in here, but look, holds the low and then rebounds. Look at this intraday rebound already, a strong intraday, even better than the Nasdaq in here, the intraday rebound. And if we go in here, look, so we did hold the low from yesterday. There's the low from yesterday. We're rebounding. And again in here, I think we can push back above. Again, I probably wouldn't want to step in and buy this until I want to see further gains. But back above 39.50 above here, then this looks more bullish to me again. This looks like the basing pattern is continuing. So I'm tentatively bullish. I'm kind of a bit of an eternal bull in these things, but tentatively bullish in here. A quick nod to the Treasury markets while we're on this tab. You can see holding on to this recovery theme. So the Treasury is basically saying to us, we're happy to buy Treasuries. We think yields are as high as they've gone as high as they need to go in here at the moment. So I still think there's a potential upside to come in here from Treasuries. And that should be positive for them, that you can get some upside going there. Let's go to I'm just really conscious that you're not hearing any of this, guys. But I'm going to have to just battle through, I think. Let's go to the commodities in here. I'm going to start off on the daily chart for the oil price. Now, this impulsive high, I think, is really important. See this last red bar we had in here from the 18th of May. This impulsive high, the market has been reluctant to get above there. And whilst below there, I'm tentatively bearish. Okay, I've been putting that in my daily reports. So that peak in there is up there. It's at let me see on here. Remember on the July contract, the high there is at 112.39. Whilst below 112.39, I'm staying bearish. Now we do get this rebound going on in here. I'm looking for it to roll lower, looking to sell into this, probably looking for it to fail. See these peaks in here, just up here. So I'm just going to zoom in a little bit so you can see. Let me just make this a bit bigger. So the market, I'm looking for it to fail here. Okay, so the high there is 110.88, and we've been as high as, where are we so far? As high as 110.78. So whilst below 110.88, looking to be a short in. Now, if it breaks 110.88, it probably opens risk up to, like, a dollar up towards that 111.80, but then looking to then reset short. So if it breaks 110.88, you can go long for a dollar and then looking to reset shorts up here. Below that, below the recent high, and then more importantly, that high up there, that 112. Where are we? 112.39. I said right. 112.39. I think it is. Yeah, 112.39. So tentatively short below 111.88. Sorry, 110.88. If not, then setting up new shorts up in here, up into like the high 111s, low 112s. And then a stop and reverse above that 112.39 level. So that's how I would be playing that one. Let's take a look at gold. Dollar continues in here. Here's the dollar index, still going lower yesterday. And if we go and look at gold, with dollar down, gold's pushing up. Strong day yesterday, did get a setback, pushing back higher today. And if we go look at the 15-minute chart, all looks very positive in here for gold. Back above that peak there, this little overnight high, that is at 1859.4. You see 1860 in here. I think that's a buy signal, and this could easily add in $7 or $8 to the upside and make a new high in here. So looking for that to be the trigger on the long side. I really hope you've heard all this, guys. I'm just worried that you haven't heard it, but if you have heard it, all the well. If not, then sorry, and which guy, you won't be able to hear me say sorry anyway. So I'm going to wish you all a great trading day. Please do stay safe, and I'll be back with you with another Bull versus Bear webinar on Wednesday. Take care.